What's up, guys? Going into this 2 o'clock hour, we're going to see if we can see a clear and obvious silver bullet. I will say, I actually haven't looked at the dollar since this morning, so let me do that. Yeah, I think, today's another just small range day, which I think is normal, coming off the move we've had. So if anything, we're going to be scalping some like internal range liquidity. I noticed, so I think on NASDAQ, it shows a little better than ES, but this was like a really small fractal market maker sell model. So you can have the original accumulation, then you have the accumulation here, smart money reversal coming down. You have a really large second stage redistribution, but then you can notice right here the way it ran for these lows, and see, just it looks like a nice box. It's just really good original consolidation that it ran right below and then shot right back up. So like that is an example of this was on like if you were to go to probably 30-second, 15-second, 5-second fractal inside of a 1 minute. That's what was happening right here. This is also the lunch low. So it's the low at 12. That's the lunch high. Again, I don't think just because we're in one of those, on the higher time frame, we're in a consolidation. We don't have a clear draw on liquidity. And because of that, nothing is going to be super high probable, super easy. But I thought I'd log on in case we see something. You know what really made me log on was this right here, because I was watching this play out and I was like, okay, so I kind of have a, compared to this morning. This morning I didn't have the best read on price, which happens, but I kind of got a good understanding of what price was doing in this lunch hour. And then I thought, okay, so I would be comfortable with targeting this buy side because of this whole sell side narrative. Again, it looks like it might want to kind of continue lower. I'm not really surprised at the lower, just because, again, on the higher time frame, we have this daily fair value gap, large fair value gap. So I'm not surprised that price is going to want to consolidate, build sentiment, possibly dig into this fair value gap for a deeper discount before going higher. That's not shocking on the higher time frame. But what we got to do is we have to make sure we manage ourselves correctly on these lower time frames. Again, just understanding that, today can easily be a day that was just like yesterday, and a little consolidation. You can have this day here, and Friday could also be that too. But I think I would take the trade again. The trade we took this morning, I would take that again. But now that, just because that happened, like price prior to 9:30 was good, and then I kind of, in that live stream, I explained why I wanted to go long, and I thought it was on ES, but I thought the setup was there. I think what happened was that today just is going to be a day where it's kind of seek and destroy, choppy. So it makes sense that the setup didn't pan out too well. So again, we have to make sure that we manage ourselves while we are in this rougher environment, while the price kind of digests and builds more sentiment around the big move that just happened. Again, so I do think we could go a little lower. I like the narrative around longs right now for myself. If you look at ES compared to NASDAQ, this high, I'm going to try and show you on the 5 minute. This high right here, this lunch high, So on NASDAQ, it came pretty deep into this morning's highs, the highs that formed this morning around 10. On ES, it didn't even come close. So on NASDAQ, we got some candle wicks above those bodies. ES didn't come anywhere close to that. So ES, I just think it's important to point out that high, that little discrepancy. But our lows are looking pretty similar. So we're having we're matching on the lows of the day so far. I guess it's this NASDAQ retracement was a little higher than ES, but we have taken, but aside from, at least on NASDAQ, you could argue we took some liquidity with this lunch high, just coming up here, cleaning up, kind of, we wick above the bodies. So I would consider that a sweep of liquidity. But on ES, we don't do that. So on ES, we have a lot of downside taken. Haven't had much upside taken. So I do like that does support our narrative of, sweeping this lunch low, finishing this market maker buy model. If we see a shift in market structure to the upside, I'd be interested in trying to take a fair value gap. Because again, we just took sell side liquidity. And we've been taking sell side a decent amount today. So I think, remember, the silver bullet is an entry that's targeting liquidity. So I think buy side, especially on ES, is a little overdue. And yeah, I do want to keep it on NASDAQ just because I think NASDAQ delivered cleaner compared to ES. It's hard to see it in ES. If you look at the 1 hour still, though, all our bodies are respecting that daily fair value gap high. We're doing a lot of wicks on the 4 hour. I do think the daily candle, though, is going to end up looking something like this. I don't think we're going to get much of expansion. 4 hour, holding that fair value gap. And another thing about kind of this silver bullet. So whenever you're in a range like this, your best bet is to try and, so we're going to assume we're in a range right now for probably the end of the week. And it's going to want to move throughout this range. So the best probability you'll get when you are in a range bound scenario is just kind of playing it from one end of the range to the other. So you can see we're in the bottom half of this range, bottom 50%. So again, just trying to take after we just took lunch sell side, trying to take a silver bullet to the upside, with that, internal liquidity bias kind of also supports just the idea of we've spent a decent amount of time at the bottom of this range. Maybe it wants to go clean up some of the buy side on the top of the range. Here we go. Getting some movement here. ES broke above that high. Right there. Yes, looks like it's about to make a little fair value gap. I'm going to stick to looking at NASDAQ though. Going to kind of pay attention to see how ES treats that inefficiency, this fair value gap. Kind of betting on, you know, the fact that if it is going to run for buy side, NASDAQ will form one. Okay, so ES is touching down into that fair value gap. That'd be a decent entry. Tight stop. Gonna see if NASDAQ can give us an entry. You know, it might be a better idea to act. I'm wondering if it would be a better idea to trade. Okay, gonna focus. Kind of like what we're doing here because, you know, we use this ES, what we're seeing here, as like a confirmation. So we can see if it respects that fair value gap. Then we'll see if we can catch one on NASDAQ. Looks like it is. I will say these aren't the best conditions. And I like how deep of a discount we're in terms of this swing up. Right at the, I guess it's not that deep, 50%. But we came down, so we came down, dug into below 50%, and now we'd be in kind of trading to the other 50. So you can see, actually I don't know if you can see, I made these wicks white in hopes that they pop a little more for you guys. But we have 4 wicks that are all dead even. So I do see ES at least coming up and cleaning that up. The question is, does it do it with a wick, or do we get up there and close a strong body above it? Okay. If NASDAQ puts a candle above these, I'd prefer if ES also did. I want it to look strong. Okay, not bad. I want to see another candle like that. Notice how on this swing high for ES, we came above this swing high, whereas NASDAQ is doing that just now. So I do want to be weary on whether, ES already took the liquidity above that high. I just want to make sure that I'm not kind of entering on like a smaller time frame Judas swing above this high to go lower. I'll be paying attention to how this candle on ES closes. Remember I said, does it print a wick above these equal highs, or does it lay a strong body? With the dollar rising in the background. I'm starting to think this could be a Judas on NASDAQ just to get above this high, and also one on ES. Be curious to see if it breaks below this low. So again, that is an entry. That is kind of the entry we're looking for. ES is kind of making me nervous about using this as an entry. Let's see. We'll buy. The stop will be small. I want to see it get through this consequent encroachment. I want to see it really expand now. If it doesn't, probably close. We're just doing really quick scalps here. These conditions aren't the best. I'm either want something quick or nothing at all. Notice how the dollar's going up. I want to see it really get through that consequent encroachment. Now that we're above that wick, I'm gonna just move the stop to break even. Okay, so there we go. 10 handles there. Just kind of making up for this morning, that small loss. We'll see if it continues. This would be, we have these equal highs here, so I'd watch that for the next level. I definitely would have taken that 10 handles, just because remember, with 10 handles is the low-hanging fruit, because NASDAQ can just move 10 handles on just like a retracement and ebb and flow. So because we move 10 handles, don't just assume that we are on sides. If we got above these highs right here, I'd be pretty confident that we're going to continue going for that buy side up here. But look at the dollar. It's rising pretty aggressively, actually. Which is one of the reasons why I moved my stop to break even and just put that at 10 handles. Again, this is just really, really like scalpy. I wouldn't really call this super high probability conditions. ES is what's really kind of making me nervous. It doesn't really want to move to the upside, whereas again, like I said, NASDAQ kind of ebbs and flows a little more. So I knew if you enter on a fair value gap, you could get 10 handles of just movement. I'm going to wait before we call that the silver bullet. If it took these highs, yes. I think getting above these highs, because these are 5-minute highs right there. So I think this buy side liquidity could be in play after that. It's good that the dollar looks like it's making a swing high for these upside. But these market conditions do make me nervous, because see how like this isn't super clean price, so when it gets up to there, it could they can have pretty sharp retracements back to what seem like random levels, but it's really just because you have such hard structure to read. Like, for example, look at how it delivered to this in this market maker sell, this mini market maker sell model. When we got to that second stage distribution, we had the retracement up into this fair value gap, and then you had to break lower, but then it came back up and took that high. Came down, didn't take it, but then came up and went even with this high. So if you had a stop there, it could have possibly got you and then delivered. So in conditions like this, it can be very rough. Again, see how we just stopped perfectly there? You could easily like come back, hit this little order block, and then run. I'm noticing how ES printed another 4 perfectly equal highs. Yeah, and then look at the hourly. That's rough. I really just want to see if that little theory I had plays out. The theory was looking on the higher time, maybe the hourly is better. Higher time frame, we're in this range. So draw out the range, and the best probability is, playing from one side of the range to the other. And what that kind of is just, targeting internal liquidity. So as you can see, it's even better on ES because this high is lower, but came down, took sell side, took a little bit of buy side. But after 10 a.m. and this high, it's just been sell side, especially on ES when this low is a lot lower, or this high is a lot lower. So what it's really doing is it's kind of like playing the ebbs and flows of like the seek and destroy, like just targeting like liquidity on each side, one side, target liquidity on the other side, target liquidity on the other side. So yeah, I want to see if that plays out. Coming off of, we took this lunch low, which happens to be a very mini market maker sell model. So I'm considering this low right here significant because it swept liquidity. And then I want to see if we take these equal highs and then keep going. Let's see, we printed a down close on the 5 minute. which went into this 5-minute for value gap. I wonder if it's gonna now expand higher. But again, today's one of those days where just walking away green is a win. It's not one of those days where you want to be trying to actually pull significant money out of the market. Like I said, coming down to that little order block. I could see a scenario where we go lower because you can see it on the 1 minute. When these wicks came above these candle bodies, so let's frame it in the terms of liquidity. I heard ICT said this once. When the bodies hold the most of the volume of trading, so having this wick just come above the bodies can be enough to consider it a sweep of liquidity, or it's just taking liquidity. And then you can see it breaks lower. And then that kind of goes hand in hand with the fact that ES didn't make that much of a higher high. So this is still in relation to, if we look at the 5 minute, in relation to this high, this is a lower high. after we broke. So we broke to the downside, made a lower high, I guess on the 15 minute. It's really where that holds true. Made a lower high, and then you would continue lower. But in reality, I think we're just in a lot of sideways action. I like the idea on the 5 minutes. So on the 5 minute, if this is a long-term high, you'd want intermediate term highs next to it. So intermediate term high here, intermediate term high here. And on the sides of those intermediate term highs, you'd want, or sorry, lows. Long-term low, intermediate term low. So this is intermediate term low, short-term low right here, and another short-term low right here. So if the dollar continues to fall, we should come up and make another intermediate term high. I would like it if we got above these highs. I think if we got above these highs, we could get to these highs just because that is a swing high in the 5. So we'd have a shift in market structure on the 5 minute. We have the dollar. Let's see if this double top is a significant reversal and the dollar comes down lower. I'd want to see the next candle, so I want to see this be treated as an immediate rebalance, and then the next candle at least go up a decent amount. Again, this is just one of those times where it doesn't even have to listen, because it's like kind of seek and destroy-esque conditions. We have the dollar going lower, so I'd want to see it close above that high. Again, this just kind of showcases, we had that idea correct, but where would you have entered on? We entered on this and then took our first 10 handles, but then you could have, it retraced, like you could have had a wide stop loss, but the odds of getting stopped out were pretty likely. And then it continued higher. I'd want to see this act as an order block. I wouldn't want it to get down past this down close candle, which it easily could. You can see this one right here. That's where price turned around. Notice how the bodies respected the mean threshold and then went up. We'd really want to see the down close candles hold price off to the upside, and just understand that, anytime you take highs, it could reverse. But until it takes these highs, you want to see this down close candle hold price off. So this high looks like it's perfectly even with these two, so we just need to get above that. then when you do get above that high, you'd want to see this next candle, depending on how heavy it closes above it. You want to see this next candle support price to the upside. But I mean, if the dollar, I'd like it if the dollar looked a little heavier. I really want to see like the consequent encroachment of this wick hold price off. Damn, it's already 2:40. That was a long 40 minutes. Or a quick 40 minutes. That was a quick 40 minutes. Cool. Want to see if the dollar turns this into a swing high. Notice how it's right at the bottom of this swing low. Yeah, if the 5-minute can close above these two highs, I think that would be good news to the upside. But we need a 5-minute close. Notice how this 5-minute candle just again closed its wick right above that. I think how these next few 1-minute candles print will be important because it's this. We have about 2 minutes left in this 5-minute candle. So these next few 1 minutes will determine whether this is a body close above these highs or if it's a wick. Just a wick that closes above, just a wick that goes above the highs. Again, now I'd want to see this down close candle really hold off price. I mean, I like this one the best. But I really want to see the dollar form a swing high here. Yeah, see, these next few candles are important. Ooh, we like that. I will not be trading again. We got back what we lost this morning. But now that we closed the 5-minute above these highs, my next thing to look at would be this high and then this buy side. I would get nervous depending on how much higher the dollar keeps going. I'm going to look at the dollar. Yeah, so we got that. Next, you can see we just took it. So we'll want to see how we react. We do have a decent amount of fair value gaps in here. I like this lunch buy side as long as we see the PD arrays be respected. If we watch the PD arrays are respected, continue to be respected, I think we could get up to this lunge buy side. So that's the high between 12 and 130. Again, let's see if the dollar goes above these highs. If the dollar goes above these highs and we see a sharp retracement, I would say this liquidity was the last, this high was the last stop. That was also a pretty hard move on ES to play as well, because if you can see this fair value gap, we dipped down pretty low into it. If you had your stop at the next swing low, you would have been safe. I guess the same on NASDAQ too. You would have had to put your stop on the bottom of the swing low. But I really think the stop, for it to be like any kind of significant, would have had to been below this swing low. And I just didn't really want to have my stop placed there in a market condition like this. Not bad. Pretty happy about being able to get that draw on liquidity correctly. Yeah, and then I think one of the main reasons I played NASDAQ was because I've been noticing in the last few times we've tried to play these in these tougher conditions, since NASDAQ just moves a little bit more than ES, it's see this fair value gap that ES formed, you wouldn't have gotten 5 handles before it had that retracement, whereas on NASDAQ we just got by a tick. We got the 10 handles before the retracement, so that was kind of why I played NASDAQ, because I knew, yeah, there's just been like a few times where we've been trading in this rough conditions, and I was like, oh, like NASDAQ just swung a little more and hit that low-hanging fruit objective. So okay, so you can see the dollar going above these highs. I would be watching to see, does it show like it's getting above these for liquidity, meaning it's just a swing high and then it goes lower, or is it going to continue higher? Because if it starts to show signs of continuing higher above this, then I think this buy side was the last stop on this little price run. Might not happen though. We might not. It's looking like it's turning around. Can you make a video on your setup on TradingView, the settings? I can do that. I will do that. I'd be curious. Let me know right now if there's anything more specific you want to see, because I'd probably just kind of talk about, the layout. This is the layout I choose. I think having 4 boxes would be too much even though I do kind of have 4 boxes here, but sometimes I'll toggle that. I don't know. I like the three views. I think sometimes the 4 is too much for me personally, but I do want to see at least 3 different time frames. So the 3 view helps me reduce toggling the most. These are the time frames. So like another example of that is I don't have a 30-minute time frame. So I feel like if there was one I would to add, it would probably, the next one would be 30 minutes. But again, that's just like a little too much cycling between time frames for me. Whereas I'd rather just get good at reading the 15 and the hourly. And I guess, maybe there is a time every now and then where I might miss something because I didn't see it on the 30-minute. But I feel like usually in those cases, if you just be patient enough, like it'll deliver. I was just introduced to ICT. It's interesting to see the thought process when somebody's trading the concepts. Yeah, and I'm definitely, not, like, I think there's better people out there than me at it. But I think the concepts helped me the most, just because, I don't know, it just really grooved with how my brain works. And I remember when I first started trading, I would do like breakouts. Like I was just like the standard retail trader strategy. It was just like breakouts. And I never understood why, like, you would break out to one end and then where would your stop be? Like I remember I struggled a lot with like trying to figure out, and I remember at that time I wasn't doing too much learning, so I could have done a better job at learning like a more specific strategy. But I think another thing with ICT is he gives you so much. He gives you everything. He just gives you the strategy. He gives you models. The models are very if this then do that. So that really worked with my logic. Like for example, stop placement, he was like 3 PD arrays. So that's pretty easy to count out. Same happened to you, yeah. And that's why, I feel like even when I see people that are successful that don't trade ICT, they trade like supply and demand. Like they use zones. I don't know if I've ever seen somebody who is super successful on like, if we break this level, you enter. Because, for example, like this days like that, well, you know why? I think that got so much heat, or that got so much popularity, and like it was when everybody in 2019 when stocks were only going up. So it's just like everybody was making money off of breakout trading because the stock market was only moving in one direction. So it was very easy to get breakouts. But like now in like these tougher market conditions, I mean, look at this 5-minute. You try to play a breakout here, you're done. Try and play a breakout here, you're done. You try and play a breakout on this bottom, and yeah. Breakers are tough. I have never found success on trading breakers on the 1-minute, for example. There's been like a few times where I might see the pattern form on a 1-minute, and I've never been able to consistently get that. 5-minute, every now and then, yeah, 5 minute, I can get the 5 minute. I like 15-minute and hourly breakers. But in a market condition like this too, like if you look at this 5 minute, you probably formed like a bunch of different breakers. And that's just because that's like you're going to see a lot of breaker patterns in a consolidation like this. So just know if you do see a market like this, don't even, I personally wouldn't even try to look for like a 5 minute breaker. Earlier this morning, or no, during the lunch hour, I was just kind of watching price during the lunch hour, and I wanted to see if this, so it's really hard to explain because there's so many candles. So right here, this big white candle at lunch, when it opened, and it opened right here, I wanted to see, or no, I think it was 11. It was at 11 when this candle was like trading down here. I wanted to see if it treated this high, low, higher, high as kind of a breaker structure. And I thought, it's on the hourly, so it could hold a little more truth. But then it's just one of those things where you have to know when to use them. Like I would not use a breaker in here. I like breakers. So the thing is though, when we leave this range, it will form a breaker and it'll be probably nice. So for example, let me take this buy side off. Well, so like now that we're in this consolidation, I would wait for us to leave the consolidation, and then you'd probably find a breaker on the 1 hour or the 4 hour. But yeah, and I don't trade breakers either. Like I would never, because a lot of times when you get a breaker, you will also get a fair value gap. So I kind of consider the breaker pattern just like in a supplement, because you'll always get high, low, high, high. Why does it do that? You'll always get usually a fair value gap. That's like, so that would be the breaker, but usually you'll get a fair value gap on this price run up, and that's when I like to enter on those. And I'll usually, like, I'll place my stop in accordance with the fair value gap usually. It's so yeah, that's actually something that ICT has explicitly said. Like breakers are really powerful when you're taking a higher time frame liquidity. So let me see if I can find one example. So right here we have an hourly chart. We have this low, high, lower low, and you don't break above it until like, so you break above it here, and then you have that question of like, well, why would I enter right there? Like it doesn't really move, and the breaker is a harder structure. So like if you picked out that, I think it could explain where this candle stopped. But if you tried to play it anywhere in here after this candle closed, that would have been hard. But this is an example of, we have this daily inversion fair value gap way over here. We broke above it, dipped down, came up. So this right here, this was a Judas swing for liquidity. So when you see that, when you're like, oh, this just took liquidity here and it's a higher time frame PD array, then you're gonna, like, that is the context around pretty good breakers. Here's another one. This isn't a super clear one, but low, high, lower, low, break. So notice how it's usually when we leave consolidations, And you can see this candle right here came all the way down, touched the top of this one, the top of that. You have it right here, low, high, lower, low, come down, break. And then there's also, I don't know if you've watched ICT's video on his Reaper, which is like a specific PD array. That one's kind of hard. I remember that one when he posted that, I was, because a lot of the times I expected breakers, like as soon as you hit the top of it, to be really sensitive. But the Reaper made a lot of sense as to why you might get a deeper retracement into a breaker. So say this is the breaker. And then the Reaper PD array specifically was a fair value gap that was formed on this side of, in this context of a bullish breaker, on this side of the price leg. So then he was explaining how when you come down and you see that, don't expect it, if it starts running through the top, don't get scared, because what it's really doing is coming from this, for this inversion fair value gap. And I felt like that gave me a lot of context as to, like, when I first tried to look for breakers, I'd get really nervous when it wouldn't just get really sensitive off the top. But I saw like in a few instances where it retraced, and it actually did what he explained. It retraced to that inversion fair value gap. Breakers, and another thing, order blocks are usually the most powerful when you take liquidity. Like, for example, so I said this was the lunch sell side. This is the last down close candle before that took liquidity. If you measure out the mean threshold, you can see we came right down to the top of that. And you could really argue that all this price action right here was just kind of being supported by this breaker right here. So it came up, support, 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 and then we left the breaker. Or, I mean, we left the order block. That's what I meant to be saying. Yeah, and like that one's significant because yes, it took the sell side liquidity, but you can't just say like this is the breaker. I mean, an order block. Damn, I have breaker on the mind. See right there, the bodies respect that one. This is something I've noticed on myself. I haven't got any confirmation on this from ICT, but down close candles like this, the down close candle before a market structure shift, I usually like to watch those ones. So that's why I thought of this one as significant, because it happened right before we shifted this market structure. And then you can also see we came back down and respected that mean threshold. Yeah, the order block is definitely probably, I think, one of the most subjective PD arrays, because remember, like any fair value gap that isn't aligned with the narrative, because remember, everything has to be with the narrative. Like, it's all like the algorithm is only gonna obey it if it's in line with the draw on liquidity. So without narrative, like any down close candle is just a down close candle, and any fair value gap is just a gap. Big displacement, yeah. I think when they take liquidity is definitely the most confident order blocks I've ever seen, like the most consistent. Yes. Yes, Akram. So because those down close candles responsible for the break of structure, they often take liquidity. So you'll see a range, and then you'll see the immediate displacement and what, goddamn. Okay, let's pretend that's a consolidation. So you could find an order block in here, and if it's taking it might be the last down close candle before the market structure shift. So like you're looking at this market structure shift, but I think what really would validate it is the fact that it took liquidity below. Yeah, I order blocks definitely aren't my strong suit, so I wish I could help you a little more there. And I'm also not gonna try and sit here and say a bunch of nonsense that sounds confident. That's why in my description on this channel I specifically put like ICT's link, because I really don't want any kind of I don't want to do any kind of like teaching. I think why would anybody? It would be like a disservice to like the concepts to try and teach them better than the guy who has everything on his YouTube channel for free, who made the concepts. But I do think that I think my strong suit is kind of finding the draw on liquidity, which I was pretty proud about this one today. The identifying this market maker sell model, where the original consolidation coincides with the lunch low. We took the lunch low and aggressively moved higher, and then we targeted buy side. Again, like this was the lunch high, but just because of these market conditions, I am a little skeptical of us reaching there, but I thought these highs were enough to get 10 handles, which we got. But now, what's price doing now? So, and that's why, in terms of like back to the order block discussion, you'll see me like I'll measure down close candles out a lot, and that's more of me just like kind of wondering if it's an order block and then seeing if price treats it as one. So in this case, these are the two 5-minute candles that were a change in the state of delivery before we came up and made this market structure shift on the 5-minute. So I was telling you how I like the down close candles before market structure shifts. So for example, these are two candles that I would like, and sometimes I'll measure them out to see how price treats it, if you can see. And then again, I've heard ICT say this specifically, whether you include wicks or bodies, it's really, that's kind of like a subjective thing. So I usually, and he said specifically, so if you have a really tall wick like this, see this tall wick, use the body. But if you have a short stubby wick, you can include the wick. But sometimes I'll just use, like in this case, I might use the bodies because that helps tell the story. Remember, like, we're building narratives. We want to build narratives. I think that's something that I kind of came to my own conclusion in trading, was like, just keep trying to find these narratives and see if price behaves, and then find your entries. And because the draw and liquidity and the narrative, they're two different things, but they're usually, you need a draw of liquidity in your narrative. So if I'm trying to figure out what the 5-minute is doing right now, we had this large retracement, but on the 5-minute we came right back down to the tops of these, what could be an order block. But because of the conditions today, I wouldn't really trust that. I wouldn't really trust anything in price right now, especially after we took this buy side that I outlined and we retraced so much. I don't think we would have retraced. Well, we see in like good market conditions, we wouldn't have retraced this much if we really wanted this next level of buy side. In these type of market conditions, again, it can retrace this much, it can go into consolidation, can like rip down, tap into this, and then go for that buy side. But that is so hard to read that it's best to just not trade it. Yeah, I never like trading the last hour of the market. I've been able to get some trades in there, but I don't really like the 3 to 4 time. Yeah, and see, like, now that we took buy side, I could see it wanting sell side. Because remember, in these seek and destroy conditions, it's really just bouncing back between different levels of internal range liquidity. Again, I will be on tomorrow, and I am hoping, still looking for longs. I am looking for longs for a while. I want to see these highs get taken. I think Friday could also still be in this daily fair value gap, but we'll see. I think the fact that we've been kind of consolidating on the like 1 hour and 4 hour, we'll see. We have the FOMC meeting minutes next week, so I'm wondering, what is it, Tuesday or Wednesday? FOMC meeting minutes are Tuesday, so I'm wondering if they want to keep it in consolidation until then. But, you know, it's almost like every week you have something, so you can't just that excuse can only last so far. Like there's FOMC next week, the meeting minutes. The week after that, it's GDP. Week after that, it's non-farm payroll. You know, there's something every week, so. Enjoy the rest of your week, guys. Well, I'll be on tomorrow, but enjoy the rest of your day. Oh wait, do you trade only NQ and ES or other instruments? No, I only do NQ and ES. Just because I used to, when I first started trading, I was trading like single companies, just equities. Like I'd be trading like Nvidia or AMD and stuff like that. But I think even when I was trading and I was like kind of like listening to other people who traded that stuff, people would still, I think there's like a consensus that different like equities and things, they do have different personalities kind of. And I remember there was this one guy, I was part of a trading group like a long time ago, which I don't think those are that useful. But he was like, he would trade AMD often. He would just talk about how he was gravitating more and more towards AMD just because he was like very comfortable and knew how the stock moved. But then once I started, because I remember the S&P at that time, I would trade SPY, and the S&P scared me. But I like kind of forced myself to like watch it more and trade it more, and I just kind of realized like why would I try and trade like 10 different things that could have 10 different personalities when you only need one. And if you want to pick one equity, like one company, that's fine, but you know, then you could kind of run into liquidity problems depending on how much volume is moving through that stock. And S&P and future, that like SPY has plenty of volume, and I was like, you only need to learn how to trade one. I think it's one of those things where it's narrow your focus. I just wanted to narrow my focus, and yeah, I maybe eventually like I could get into trading gold, like that'd be like kind of like fuck around money. But I think I still have a long way to go, and trading these markets, like I wouldn't really want to deviate from them until I can really pick these highs and lows. Because again, if the focus is making money, then it's just narrow your focus to one. I spent most of the year watching ES, and I have switched to NASDAQ. Just because I noticed that there were times when like I would take trades that would play out on NASDAQ and wouldn't play out on ES, and that kind of annoyed me. Yeah, I haven't looked at them side by side, but I don't know how much different the micros change. But you could even just like watch ES and just press the buttons on the micro, because I'm assuming that they wouldn't be too different, whereas one will be doing something that the other won't. Uh, just an idea. Don't put a lot of weight on that. Cool. Now I'm logging off. Cheers.